What is up, everyone? Welcome back to Sparrow's Ticker Notes. Today, we're breaking down a company that is currently undergoing one of the most significant identity shifts in the public markets. We're talking about HIVE Digital. Most of you know HIVE as a pioneer in the green Bitcoin mining space, the guys with the hydro-powered rigs in Canada and Sweden. But on February 13th, just a few days ago, the company dropped an AI bombshell that fundamentally changes the bull case. We aren't just looking at a miner anymore. We're looking at a burgeoning AI infrastructure giant. Is this a desperate pivot or the ultimate 10x opportunity? In this video, we're going to dive into the $30 million contract, the 540 megawatt power fortress, and the valuation math that the market is completely missing. If you hold HIVE or MARA, you need to see this. Let's get into it. Let's start with the headline, the $30 million bombshell. On February 13, 2026, HIVE announced that its subsidiary, Buzz HPC, signed a binding 2-year AI cloud service contract. This is a massive milestone. We aren't talking about a pilot project, a proof of concept, or a vague letter of intent. This is $30 million in committed contractual revenue. To service this demand, HIVE is deploying 504 liquid-cooled Dell GPU servers in their Canada West facility. For a company that has historically lived and died by the volatility of Bitcoin, securing this level of fixed, high-margin contractual income is a total game changer. It stabilizes the balance sheet and proves to Wall Street that HIVE's infrastructure is ready for the world's most demanding AI workloads right now. To understand HIVE's future, you have to look at their dual-engine strategy. I like to think of HIVE as a high-performance jet powered by two distinct but complementary engines. Engine 1 is the OG cash cow, Bitcoin mining. This is their Tier I business. With over 22 exahash of capacity, this engine generates the massive cash flow needed to fund their expansion. It's the industrial brute force that built the company's foundation. Engine 2 is the new high-octane growth engine, AI and high-performance computing. This is their Tier III sovereign cloud business. It's cleaner, quieter, and significantly more profitable. The synergy is simple. Mining provides the cheap capital, and AI provides the massive valuation multiple. HIVE is using its own mined gold to build its own silicon empire. It's a self-sustaining loop that most tech startups would kill for. Let's talk numbers and the roadmap to that elusive $140 million revenue target. Before this new $30 million deal, HIVE's GPU business was already generating about $20 million in annual recurring revenue, or ARR. This new contract adds roughly $15 million per year, pushing their immediate run rate toward a $35 million ARR. But that's just the beginning. Management has laid out a clear roadmap to hit $140 million in ARR within the next 12 months as more racks come online. For investors, ARR is the holy grail. Wall Street hates lumpy, mining revenue but loves the predictability of subscriptions and contracts. This shift alone is enough to force a massive re-rating of the stock price, as analysts start valuing HIVE like a SaaS or data center company rather than a cyclical miner. Why is the pivot to AI so attractive? It comes down to one word: margins. HIVE is projecting operating margins for their AI business at a staggering 80%. To put that in perspective, in the Bitcoin mining world, generating $10 million in revenue requires massive amounts of power, often over 100 megawatts. But in the AI world, you can generate that same $10 million using less than 10 megawatts of power. You are essentially making 10 times more money for every kilowatt-hour of electricity you consume. It's the difference between selling raw timber versus selling fine, handcrafted furniture. HIVE has realized that their power is far more valuable when it's fueling an NVIDIA Blackwell chip than when it's fueling an old ASIC miner. Keep your eyes on the calendar. Tomorrow, February 17th, HIVE is set to release its Q3 2026 earnings, and the expectations are sky-high. Consensus revenue is sitting around $97 million, which would be a 230% increase year-over-year. But don't just focus on the top line. The key metric to watch is the HPC revenue growth. Last quarter, it was $5.2 million. If we see that number climb toward $8 million or more, it confirms the AI thesis is accelerating faster than expected. We also want to hear updates on their 35 exahash mining target and their 11,000 GPU expansion plan. If management confirms these milestones, the current miner-level stock price will likely become a relic of the past very quickly. Now let's get into sovereign AI. This is a term NVIDIA's Jensen Huang has been championing, and HIVE is perfectly positioned to own this niche. Governments and large enterprises are becoming increasingly wary of hosting their sensitive data in foreign-controlled clouds that could change their terms of service or their political allegiance overnight. They want domestic compute that is secure, green, and sovereign. HIVE's partnership with Bell Canada to build the Bell AI Fabric is a masterstroke. It positions HIVE as a national strategic asset in Canada. They offer a green, locally owned alternative to the Silicon Valley giants. This creates a regulatory and strategic moat that is almost impossible for foreign competitors to cross. In the digital age, power is the ultimate commodity, and HIVE is sitting on a power fortress. They currently control 440 megawatts of capacity, with a clear path to 540 megawatts by later this year. Their biggest advantage is Paraguay, where they've secured 300 megawatts of ultra-low-cost hydroelectric power from the Itaipu Dam. This is base-load, green energy at a fraction of the cost you'd find in the US or Europe. While other miners are struggling with rising grid costs, anti-crypto legislation, or unstable wind and solar, HIVE is operating in a surplus energy environment with 100% renewable power. This isn't just an ESG slogan. It's a massive cost advantage that protects their bottom line during market downturns. But you can't just put AI chips in a mining shack. HIVE is undertaking a massive infrastructure upgrade. Bitcoin mining is TRI. It's basic, loud, and can handle some downtime. AI, however, requires TRII standards, 99.9% uptime and advanced thermal management. HIVE is retrofitting its facilities in Sweden and Canada with industrial-grade liquid cooling systems. This is heavy-duty engineering designed to handle the massive heat generated by next-gen NVIDIA chips. By investing in this infrastructure now, HIVE is skipping the line. While competitors are still trying to figure out how to keep their servers from melting, HIVE is already signing multi-million-dollar contracts and deploying Blackwell-ready racks. They are building the luxury real estate of the digital world. Let's look at the aha moment, the valuation math. Currently, the market values HIVE like a Bitcoin miner, which usually fetches around $2 million to $5 million per megawatt of power capacity. However, pure-play AI data centers like CoreWeave or Equinix are valued at $20 million to $35 million per megawatt. Why the gap? Because AI revenue is stable, contractual, and the margins are elite. If HIVE successfully transitions just 20% of its power capacity to AI, that segment alone could be worth more than the entire company's current market cap. You are essentially getting the world's largest green Bitcoin mining operation for free, while paying for a high-growth AI infrastructure play at a massive discount. That is the definition of a mispriced asset. In the AI world, the GPU is the currency of the realm. HIVE currently operates a fleet of over 5,000 active GPUs, with plans to scale to 11,000 and beyond. But it's not just about the number of chips, it's about the density and readiness. HIVE's infrastructure is being built to support NVIDIA's Blackwell architecture, which requires insane power density and advanced liquid cooling. Many traditional data centers can't handle the requirements of these new chips without multi-year, multi-billion-dollar renovations. HIVE is already there. They are signing contracts today for the hardware of tomorrow, putting them months, if not years, ahead of the traditional big-box data centers. Being green used to be a PR move. In 2026, it is a hard business requirement. If you want a contract with a European government or a top-tier university, your carbon footprint must be zero. Period. HIVE's 100% renewable hydroelectric power is a strategic moat. It's a green pass that allows them to win contracts that are completely off-limits to miners using coal or natural gas. This energy security is also a hedge against inflation. While fossil fuel prices fluctuate based on global conflict, the water flowing through the Itaipu Dam provides a stable, predictable cost base for decades. In the high-stakes game of AI computing, HIVE has the most reliable and socially acceptable fuel on the planet. Of course, we have to talk about the risks. No investment is a one-way street. First, there is the $300 million at-the-market equity program. HIVE is issuing shares to fund this massive expansion. While this capital is necessary for growth, it can dilute existing shareholders and create selling pressure in the short term. Second is the execution risk. Building Tier III data centers is technically difficult. Any delays in their liquid cooling rollouts or server deliveries could slow down that juicy AI revenue ramp. Finally, there is the Bitcoin correlation. For now, the stock still trades like a crypto proxy. If Bitcoin takes a 20% hit, HIVE will likely follow, regardless of how many AI contracts they sign. You have to be comfortable with that crypto volatility while waiting for the A stability. So what is the final verdict? We are witnessing the great convergence of decentralized finance and centralized intelligence. HIVE Digital is no longer just a Bitcoin story. It's an infrastructure story for the age of AI. They have the power, the green credentials, and now they have the high-margin AI contracts to prove the model works. If they hit their $140 million ARR target, we aren't just talking about a recovery. We're talking about a fundamental re-rating of what this company is worth. The earnings call tomorrow will be the next major catalyst to prove this thesis. Whether you're here for the Bitcoin or the AI, HIVE is a stock you cannot afford to ignore in 2026. Stay tuned for the update. And finally, the necessary legal disclosures. This video is for educational and entertainment purposes only and represents the analysis of Sparrow's ticker notes. I am an AI collaborator, not a financial advisor. Please conduct your own deep research before making any investment decisions. Markets are risky, and crypto-related stocks are especially volatile. Disclosure: the creator of this channel holds 3,000 shares of HIVE and 3,000 shares of MARA. We believe in the long-term potential of the sector, but we also acknowledge the high risks involved. If you enjoyed this deep dive, hit the like button, subscribe, and tell me in the comments, are you buying HIVE for the Bitcoin, the AI, or both? Thanks for watching, and I'll see you in the next update.